Good afternoon, everybody. I'm Liz Klayman. It's the last hour of trading. Countdown to the closing bell begins right now. Advisors, Chief Investment Officer. Remember I said Tyler's coming up? It's Tyler. He's coming up to teach you how to invest like the big guys, speaking of which, and hedge against volatility. How do you do that? Well, guess what? Do it in a highly volatile market, but you don't want to sit there scrutinizing your Ameritrade or your E-Trade account all day long because you have another job. Well, Tyler Vernon says he's your man. He's the Chief Investment Officer at Biltmore Capital Investment Strategy. He's here with his alternative investment strategy. Look, everybody's looking for so-called yield, for that opportunity to make some money. It's really hard right now. Everyone says it's a stock picker's market. Is there an easier way to do it?
Well, I just think people need to be much more diversified. Many people in our industry talk about stocks, and you have to be owning stocks all the time. And you know, the pros, when we talk about the pros, a lot of the Harvard and Yale, these endowments and universities, they've clipped away 10% annual returns over the last 12 years where the market has been flat. And just over the last couple of years, the SEC has adopted some new types of structures, things like managed futures. So these are traders that are literally sitting in front of the screen. They're trading futures on things like, you know, dollar yen, so currencies, commodities, metals, and they can go quickly long and short. And these are the things that investors really don't do at home. You wouldn't want to really get involved in the futures markets. We
want to contrast this because right now we're showing something like the Dow Jones Industrials on the screen. Yep. You know so many of these names, Hewlett-Packard and Alcoa, Amex, Disney, and yet if you go into what you're talking about specifically, managed futures, commodity trading, baskets of these things as sort of ETFs, the traders are there making those long-short trades all over the place, and you don't have to worry about it, yet you can participate in the growth of it, as Yale, for example, has done. And we just did a segment a week ago on the so-called Yale curse, everybody trying to mimic the returns of the Yale Endowment Fund. They can't do it.
Yeah, well, everybody gets caught up in the stock market, the emotion. The first quarter was great. But managed futures, you know, in general, again, these are traders that are trading these markets. There's an index, and in 2008, the futures market was actually up 14% for this category of traders when the market was down so significantly. Last month, you know, a fund that we use was up over 4%. So when the market was down, it's nice to have some things that zig when other things zag.
Let's show it. Mutual Hedge Frontier Legends, ticker symbol MHFIX.
Yep.
Here it is. Year to date, you can see the big jump.
Yep, year to date. And again, if you look at the first, well, what it does, it gives you access to professional traders that are out there trading the futures market. So it's a very actively managed strategy. There's about 12 different managers that are managing millions of dollars that are, you know, going long and short currencies, long and short commodities. They're making those decisions so the people at home don't have to make them.
A little bit more sophisticated then. Then there's the second pick, Market Field, ticker symbol MFLDX.
Yep. Market Field is a long short fund. Everybody, when you talk about, you know, investing, you talk about buying something at 25 and selling it at 30. And most investors at home, they think about, you know, the market going up. Well, the market hasn't just done that over the long term, especially over the last 30 days. We think it's important to have strategies in there that can short the market as it goes down, as well as buy into them as it goes up. So again, having having managers that can make quick snap decisions to get out of things on the long side and start shorting the Facebooks of the world and these things that are making money as they go down.
Well, because a lot of people there have a job, hopefully, or they're worried about it and they don't have the expertise.
Sure.
Tyler is coming back with 3 stock names, actually. Well, 2 stock names and 1 ETF. So he started with the more exotic things, and now he's coming back in just a few minutes to name some names perhaps that you might have in your portfolio already, but might want to also consider. The closing bell ringing in 36 minutes. Back to tell you how to invest and get paid while you wait for these markets to stabilize just a bit. My goodness. Smacking a lot of us around. How would you like to go into a little cave, be all warm and cozy, and get paid to wait till things calm down? Tyler Vernon of Biltmore Capital is here to tell you how to do just that with some picks. And I'm surprised to hear you say that some of these are the ones that will help you do that, because while, say, for example, your first pick has moved exponentially higher over the past year, it's been known to lag just a little bit, and that is Intel.
Yeah, sure. Well, I think that's what's really presenting the value here, right? Intel, we all know Intel. It's somewhat of a boring story. I mean, they're in all the computers. But one of the reasons it's priced the way it is because of that. We're sitting at about a 11 PE. It's giving a 3.5% dividend, so we're getting paid nicely. What they didn't do was they didn't see what was going on with the computing. They didn't get into the tablet market. They didn't get into the smartphone market. And they spent billions of dollars over the last few years to try to figure that out. And they've done it. There's been some recent announcements. They are getting into some various smartphones. They're getting into some tablets. And I think this is just the tip of the iceberg. I think they've figured out where this is going, where computers are going over the next 10 years.
And remember, they have 80% of the market share in computers. So you got the smartest guys in the room saying, we want to get into smartphones. You know they're going to probably figure out a way to do it.
They figured that out. In addition to that, Microsoft is rolling out their Windows 8 over the last half of the year. We think, instead of just buying the operating software, a lot of people say, I'm sitting on this 5-year-old computer. It's riddled with viruses. We're just going to get new computers. And that's this upgrade cycle that we hear about.
Ultrabooks, really, which is what Intel's pushing.
Yeah, exactly. So. Exactly.
All right, so Intel's your first pick. Now here's his second, and this is BlackRock, which might make people a little bit nervous because, of course, it's in high finance.
Yeah, well, but it's different. So BlackRock, just to make that point, they have some, they market their risk management software. So I don't believe you'd ever see a blow up like JP Morgan. You wouldn't see the billion-dollar negative trade. They actually outsource, they market their risk management to other companies. So they actually oversee about $10 trillion of other people's money, or they provide the risk management software to do that. It's not often you've seen the stock go down to about 11 PE. You never see the thing at a 3.5% dividend. We saw some major insider buying last week. One director bought 8 million, another, a couple million. A lot of big hedge funds own this stock. We recently saw reports, David Tepper from Appaloosa, John Paulson, huge positions in this stock.
So the fast, smart money going into it, the so-called, I should say, because they make mistakes too, but Bernstein just cut its price target. This I find funny, considering it's about 166 at the moment. Bernstein cut its price target to 205 from 255. Yet the stock, 225 from 255. So
that's still a nice appreciation.
A nice appreciation, but on top of that, you can obviously look at this and say there's an opportunity for some movement here.
Yeah, there's an opportunity. It's trading a lot cheaper to their peers. They're getting into lots of different markets. Their earnings per share are up 10% year over year. Their assets under management over 5% up, year over year. They're operating on all cylinders. They're getting into the retail market, and they're doing very well.
And finally, and Tracy and Ashley were talking about gold in the previous hour, of course. And this is a touchy subject, but you believe there's a place in a portfolio right now for gold through an ETF.
Well, I noticed that. They talked about it being a very emotional sort of place to be. But if there's anything that this market is these days, it's emotional. So, again, we're talking about more QE. It's hard to find too many people that say, we don't have to print money for Europe to get out of this situation and for the U.S. to continue to kind of, operate the economy on this, on this drug as far as more QE. So when that happens, you're devaluating the currency. We're going to see gold, at least retain its value, right? If the dollar sinks, gold retains its value and will go up in dollar terms. So we think that, especially in this volatile environment, over the last couple of days, we've seen gold up. We think it'll continue to happen as the European crisis continues to unfold.
We are going to put all of Tyler's picks, including the ones that he picked in his first segment, up on the Facebook page, facebook.com/Liz Klayman. Tyler, good to see you. Thank you. Tyler Vernon, Chief Investment Officer at Biltmore Capital Advisors. The Dow now at